Hey friends, we are going to talk today about tracking tax information for your small business. So let's get started. Hey friends, if you're new here, thanks for joining. Otherwise, welcome back. I'm Jen, single mom, artist, and entrepreneur. And my main goal here is to help teach other single parents that it is absolutely possible to build the life that you want. Today, we are going to talk all about tracking information for taxes. Let me start by saying I am not, so I'm not going to tell you how you should or should not file your taxes or how you should or should not organize your business. We are simply going to talk about the kinds of information that you should be tracking and keeping records of for your tax professional for the end of the year. If your records are together, it's going to cost you a whole lot less money to file those taxes. If you can hand your CPA aggregated information so that they can just plug it in where it's necessary, it's going to make your life a lot simpler and a lot less expensive. If you hand that CPA a box full of receipts that they have to catalog and categorize, they're going to charge you a whole lot more. Not to mention that if you take the time to organize and catalog those receipts and expenses, you're giving yourself valuable information about your own business so that you can make adjustments when it's necessary. So this is a really great practice anyway. Now, there are multiple ways that you can do this. You could purchase some sort of system like TurboTax Online or something like that where it categorizes your receipts for you. Or you can use a simple Excel spreadsheet, which is what I do. Maybe someday I'll do a more automated system, but for now, this works well for me and it accomplishes what I want it to accomplish, and it requires me to be a little more hands-on with the financial side of my business, which I find to be valuable because it lets me see where things really stand inside all three of my businesses at any given moment. I do all of my receipt aggregation at the end of every month. So once a month, I go through and I fill out the spreadsheet for the month. So I know exactly where things stand all the time. That's important information to me because it lets me make adjustments in my marketing plans and make adjustments in general to my business on an as-needed basis. So while this process can be kind of daunting to some, it's valuable for you in so many ways, and you absolutely should give a shot at just keeping track of your own receipts, just even if it's just for 1 year, so that you have a good understanding of what you're doing. So let's talk about the different pieces and parts of taxes. There are two main things that you're going to be tracking. You're going to be tracking your income to your business and your expenses for your business. Now, I use a simple Excel spreadsheet, and I'm going to show you that Excel spreadsheet as we go along. But first, let's get a grasp on just what we're talking about. So income is money that comes into your business. Sales of goods or services is income. 1099s for any contract type services that you would provide to someone. Interest on business accounts is technically income. Anything like that is income. So anytime there is money coming into your business, you're going to want to record that. On the same token, you're going to record every penny that goes out of your business. And there's several main categories. Expenses are things like the cost of goods sold, insurance, taxes and fees. Pretty much any money that's going out, that flows out of your business is some sort of an expense. This can include expenses for a vehicle if you use your vehicle for your business. So basically, what you're figuring up is the difference between your gross income and your net income. Your gross income is all of that money that comes into your business. Your net income is your business income minus your business expenses. So just for simplicity's sake, let's say you sold $10,000 worth of goods or service, but you purchased $4,000 worth of supplies. your gross income was $10,000, but your net income is $6,000, which is what you're actually going to be taxed on. Cataloging income and expenses is important because of the tax deductions that you can take using those expenses. Expenses can include expenses associated with your vehicle if you use your vehicle for your business purposes. And you can track that in two ways. You can track it as maintenance and gas costs, or you can track just mileage and take a mileage deduction on your vehicle. I suggest if it's your first year doing any kind of business stuff that you track both and then speak with your CPA about what is the most advantageous for you to use when you file your taxes. You won't know if you don't have all the numbers. Equipment and fixtures that you purchase for your business can be depreciated also, which is another conversation to have with your CPA. If you contribute to a 401k or retirement account of any kind for yourself and or employees, that also is an expense that can be deducted. If you travel for your business, you want to track your travel, transportation, and meal expenses. If you pay wages to anyone for services to do with your business, you'll want to keep track of that as well. So what you pay your CPA, what you pay your bookkeeper if you choose not to do your own books and you have somebody else that keeps track of things for you throughout the year, if you use a social media manager, any of that stuff, those are wages that are paid that are also tax deductible from your business expenses. If you use part of your home for business, that's also a potential deduction. And again, that's something you want to speak with at length to your CPA about, what the advantages and disadvantages are of taking that deduction and what the requirements are to be able to take that deduction. And lastly, you have your cost of goods sold or your supplies, depending on the kind of business that you own. So if you're in a service business, you're not going to have actual goods that you're selling, but you're still going to have supplies associated with that business. So for instance, for my massage business, obviously massage is a service. So I'm not selling a product per se. So there's no cost associated with the massage itself, but there is the cost of supplies for that massage. So I do have to furnish sheets and oil and laundry detergent and things like that in order to make my business run. So there are still supplies which would be considered cost of goods in this particular case. They just aren't goods, it's cost of service really. The last thing is other expenses, and that can be all kinds of things. Membership association fees. For instance, I'm a member of the American Massage Therapy Association, AMTA. There's a fee associated with being a member to that. That is tax deductible. Credit card fees, absolutely you should be tracking those. If you accept credit cards, you are going to pay a credit card processing fee. That's just the cost of doing business. However, those fees are absolutely tax deductible at the end of the year for your business. So it's not really a sunk cost the way a lot of people assume that it is. Business subscriptions. So for instance, I have a subscription to Photoshop for my photography business, Photoshop and Lightroom. And that monthly membership fee is an expense that I can absolutely track and deduct. For my stained glass business, I ship a lot of products. Ship costs are absolutely tax deductible. So basically, anything else that you spend money on that is for your business is considered an other expense, and you should be tracking those things. So let's take a look at an Excel spreadsheet that I put together just as a sample to kind of show you what I do. Okay, so you can see over here, I have the date, the description of what this receipt is for, and then a bunch of categories: gross sales, car/truck expenses, mileage, if I'm tracking that, travel and entertainment, meals. The IRS has two different categories for meals, a 50% deductible and 100% deductible. Again, that's something to discuss with your CPA. But I pull them out separately because it could be different. Wages is again money that is paid to people who do things for you, such as your CPA or a social media manager. If you have items that are produced by people, those wages actually fall under the cost of goods sold. That's a separate category. Most small businesses don't have that. So I'm not really going to address that because I'm just going to assume that that's not part of your deal. And if it is part of your deal, you need a legit bookkeeper and CPA that know all the ins and outs of that to be doing things for you. Again, cost of goods sold, which is supplies that go into building whatever it is that you sell, or supplies associated with any service that you provide. And then other expenses. Again, those other expenses can be literally anything else: professional association fees, credit card fees, shipping, all of that stuff. Now, on top of an other expenses category, I personally do like to call out individual things. So I like to have a category for shipping and postage. I also like to have my own category. Let me make that bigger. I also like to have a category for credit card fees. I can't type when I'm on the computer here. And lastly, this is not an IRS tax thing, but it makes my life easier. I like to keep a category for sales tax. And here's why. Because if I sold a $48 piece of glass here, in the state of Indiana, our tax is 7%. I can't do that math in my head, so we're just going to make it 10% and say it's $4.80. At the end of every month, I'm going to put a totals column down here. I'm going to do an auto sum at the bottom, and it's going to tell me the sales tax I collected for that whole month. So, and I'm going to do that for every column. So, at the end of the month, when I go to remit my sales tax to the state of Indiana, all I have to put in is my gross sales and my sales tax collected, and I don't have to do any math, and the work is already done for me. So even though this is not a federal tax information thing that I need, this is specific to my state, I track it anyway monthly because it makes my life simpler in the end. You can do that or not do that, that's your call. I also like to keep my credit card fees and my shipping and postage fees separately so that I can see how much it's costing me to ship things. Because if at a certain point shipping is costing me a really giant chunk of my gross sales amount, it's time to reevaluate how I'm going to do this shipping. Same thing with credit card fees, because you can always switch credit card processing providers. Most of them for small businesses are really right about the same amount, but not all of them. So that's always something you can shop around if you decide what you're paying here is just getting ridiculous. And people's terms and how they do things change throughout the year. It lets me see if things have changed that I just didn't notice and hadn't paid attention to. And like I said, I'm going to have a totals column at the end of this. I'm also going to set up a sheet for every month, and sheet 13 is going to be my end of year totals. And I'm going to set it up so that it takes this total number from sheets 1 through 12, adds them all together, and pops it into that column for sheet 13. So it's going to add everything up monthly for me, and it's going to add everything up yearly for me. And the amount of work I have to do at the end of the year is going to be really, really little. I hope that makes sense. So that's my little talk on how to track your income and expenses for tax purposes. As I said before, I am not a CPA, so please, please, please consult a CPA when it comes down to time to figuring out what of those things are appropriate to file for and how, because your business is definitely probably going to be different than mine. They're all different, and it helps to find a CPA that's familiar with your industry. I hope that you found this helpful, at least in figuring out how to categorize expenses so that you can properly track them. One thing I didn't mention that I'd like to is if you're going to track mileage for your car, you need to track the beginning mileage for the year, the start and stop mileage for every trip with the total number of miles for every trip, and you will also need your odometer reading at the end of the year. I hope this information is helpful. Please feel free to comment below, tell me what you thought, drop a like, subscribe, and I will see you next time. Thanks for joining.